Frequency Podcast Network. Stories that matter, podcasts that resonate.
So remember all of that talk about Canada being in a technical recession? Yeah, the final quarter of 2025 and first quarter of 2026 were not great. Back-to-back negative quarters, and there was all sorts of debate. Are we in a recession? Was it enough to really qualify as a recession? And then you kind of get back into the actual data tabulation, and some questions were being raised about that. But this past week, we had some encouraging signals again from the economy. The start of the second quarter, not too bad. GDP was rising, 0.5% month to month. It's on pace for a 2% gain for the entirety of the second quarter. The May forecast from Stats Canada also was positive. But it brings to, again, some questions about the validity of the data, the huge swings that we've seen, the forecasts on these economic reports and how they've either been way off target or close, or some questions about what's really going on with the state of the economy. Yes, there have been a lot of changes and issues to deal with. Of course, trade at the forefront, and of course, the volatility in the price for oil. But nevertheless, how can we trust the data? And big real-world implications if these numbers are off target for, the Bank of Canada and interest rate policy. Welcome to In This Economy. My name is Mike Eppel, and just recently we actually had a report issued by Desjardins raising questions about the Stats Canada tabulations. One of the co-authors of that report is LJ Valencia, an economist with Desjardins, who joins us on the line today. Hello there, LJ. Thanks for doing this today, and nice to talk to you.
Thank you so much for having me, Mike. A pleasure to be here.
Yeah, we'll start with the, this latest report on the state of the economy. GDP for the second quarter looks to be on a solid footing. And what was interesting about that was we thought it would be positive, maybe underestimated the end result for the bounce back to start Q2.
Yeah, for sure. So as you've mentioned before, real GDP in April increased at around 0.5%, and that is, that followed a decline of 0.1% in March. Now, this came in above, not significantly, but above the expectations of economic forecasters and Statistics Canada, which was around 0.4%. Now, a lot of the strength that we've seen this month has been mostly driven by goods-producing industries. That said, we shouldn't discount some of the more modest contributions that came from services-producing industries, which rose for a third consecutive month.
Now, having said that, Stats Canada had kind of warned, too, that these numbers that they're putting out were subject to revision, and maybe more revision than typical. They'd kind of put a precursor to this. Was the first quarter, were there any revisions there? Or did it still come in down 0.1% overall?
I suppose that's a really good question. And one thing we can take into account is that the extent of revisions that we've seen so far from this data release is relatively modest. But one thing that comes into mind really is that we have to watch out for what happens at each end of the quarter when the quarterly GDP comes out, because that's where we've seen a lot of these big data swings, especially over the past couple quarters of GDP data. Say, for example, when Q1 came out at least a month ago, and when Q4 and Q3 GDP came out. And so that's certainly one thing to keep in mind. At the moment, what we're seeing with the numbers is that there's been minimal revisions in the monthly picture of the economy as we see it through this monthly GDP data. But that doesn't necessarily mean that the picture isn't going to change in subsequent months.
All in all, though, prior to, again, good start to Q2, the previous two were negative. I mean, what was it, down 3 of the past 4 quarters, if my memory serves. This is still an economy that is struggling. I mean, let's face it, you've still got, now the trade deal is up for renewal. The U.S. didn't sign off immediately on this USMCA trade deal, and no one expected them to. But, the wild card in the first half of the year, war in the Middle East, nobody saw that coming. That was another thing that just kind of sprung out of the blue. So, I mean, when we talk about an economy that has been beset by a whole bunch of factors, outside forces, maybe that's, maybe none of this should really come as a surprise that it's seeing these big swings monthly and quarterly.
Yeah, that's an interesting point, and thank you for mentioning those facts for sure, because if we look at, say, for example, how GDP has evolved last year, we've seen, despite the volatility and despite the negative declines in quarterly GDP, annually real GDP still grew in 2025. And so that's certainly one thing to keep in mind. It grew at around 1.9%, right? And the second part for sure is that because of this sort of structural change that the Canadian economy is facing because of the trade war, and because of the pressures that comes in the form of uncertainty and tariffs, that's certainly putting a lot of uncertainty and volatility in the economic numbers. Now, that doesn't necessarily mean that the Canadian economy may not grow, but what that translates to is what, as you've mentioned, what we're seeing so far is that economic activity continues to be very volatile, as we've seen over the past few months, ever since the start of the trade war.
Okay, so you, along with Randall Bartlett, another economist at your compatriot there at Desjardins, put out this before we got the GDP update, this analysis, and I take it as criticism too of the Stats Canada tabulators, because what we'd seen, LJ, prior to all of this, and the first quarter results and the talk about a technical recession, all these things really, I don't know, brought the Stats Canada data into the spotlight, because there was all sorts of hue and cry. Well, is it a recession? Is it not? How can we trust the data? And this study that you guys did was called Diagnosing the Data Quality Crisis. You throw the word crisis around, and that's it's not hyperbolic, but it really caught a lot of people's attention about what's going on at StatsCan. What was your thesis behind raising these red flags about these statistics? Because to some extent, they had been called random number generators, because what economists had expected from not just GDP, jobs, inflation, sometimes the expectations and the end result were way very, very much different.
Yeah, that's definitely, there's a lot of things to unpack in that question, but I think there's a few key ideas that one should keep in mind when it comes to reading our recent report. Is that the first thing is that the reason why we mentioned this to be a crisis is that this sort of the extent of changing revisions in monthly GDP by industry hasn't been a new story. This has been happening over a few years now, since the end of the pandemic. And we've seen this consistent problems. Although in some months there have been cases where the revisions aren't as big, but the issue of much larger revisions in general after the end of the pandemic is becoming a persistent issue. And why is that a problem? Well, for economists, we have, especially here in Canada, we have the blessing of having a high frequency monthly GDP indicator. And in theory, that's supposed to help us, give an early signal of what quarterly GDP may look like. But because of these revisions, this puts a lot of uncertainty and certainly muddles the signal of what we can expect quarterly GDP to look like, especially when we're doing regular forecast updates. So that's certainly one, is the issue that this has been happening for quite some time, and it's a well-known problem among economists. And two, it has been putting a problem on our ability to get a much more accurate picture of what's happening in the Canadian economy.
Well, when you've got the Bank of Canada saying their policy decisions are all about the data, if the data's a problem, then Tiff Macklem and the policymakers at the central bank are kind of flying blind, are they not?
That's certainly an interesting point for sure. For the Bank of Canada, and for a lot of government institutions, they take data very seriously, especially in their day-to-day decision-making process. And so it most certainly puts an issue and puts another cloud of uncertainty when it comes to making, say, for example, setting the interest rate based on what we're seeing so far in the economic pictures. And so it certainly complicates the economic picture for not just the central bank, but any sort of policy institutions or any sort of government institutions, such as the federal government. When they set the budget, they make projections. It certainly puts another layer of uncertainty for sure.
Well, but that's real. Those are real world implications, as I said earlier. I mean, when we're talking about interest rate policy, that affects day to day Canadians, mortgage holders. And that it's That in and of itself is kind of troubling, I think. We sometimes put out these reports about GDP, and you kind of think, how does that affect me directly, or the average listener? And it's like, yeah, it actually trickles down to pretty much everything, doesn't it?
Oh, it most certainly can. Absolutely. One thing to keep in mind as well is that because of these revisions, right, there is a possibility that that negative picture, the negative number that we saw in Q1, may get revised up. And the question of a technical recession, as we've seen in the past, may suddenly disappear because of a significant upward data revision. I think that's definitely a thing to keep in mind, especially when it comes to the issue of how we're seeing the economy is doing, right, for the average Canadian. It's important as well because given the fact that we're facing these significant shocks, it's not just the trade war that we're facing. There's this the ongoing geopolitical tensions in the Middle East, which is certainly putting other pressures not just on inflation but also on economic activity. Getting an accurate picture of what's happening, of a consistent, not just accurate but also consistent. One thing, yeah, that's for sure, consistent, because again, if the picture that we've seen last year has changed because of these big revisions, then yeah, it puts into question what the economy actually is that has been doing, right?
Well, and don't even, then you get into the political aspects of this, because as soon as that technical recession buzzword was mentioned, that caused a lot of issues in Ottawa. The opposition parties jumped all over that. There's all sorts of tentacles to this. What do you think, though? Has anything specifically changed at Stats Canada to lead to these bigger swings in how they're calculating the actual data? Have they changed something from their statistical calculations? And on top of that, or maybe because of the prime minister and the Liberal government, they're going through all these departments with a fine tooth comb and looking for cost savings, and they've told StatsCan to cut some expenses. So is that tied to this, or is it too early to say that that's actually had an impact?
So a couple things to keep in mind. So the first thing is that it's certainly an ongoing work in progress for StatCan to adjust their estimates and make sure everything reconciles. So that's an ongoing work in progress. As someone who's been part of my job to regularly keep track of what's happening in the economy and real GDP, especially, it's certainly work in progress for StatCan. Now, on the second part, and you've mentioned it as well, is that StatCan is facing significant pressures in terms of, well, looking at the budget front. Um, Say, for example, through the comprehensive expenditure review in Canada, there's been expectations, for example, that StatsCan is expected to find roughly $338.9 million in cumulative savings in 4 fiscal years, starting in 2026-27,
That's a lot.
with over
That's
it is a
a
lot.
lot of money.
It's a lot. It's a lot of money. It's a lot of resources, right? And and then afterwards, with over $100 million in ongoing savings every year thereafter. And as a result of these of much fewer resources that's been allocated to StatCan, they have had to scale back their planned future staffing levels. Say, for example, if you look at the latest departmental plan that they published, the statistical agency, as they're with their current projections, is roughly around 6% lower over the coming 3 years on average than what was previously planned with their prior departmental plan. So for Statistics Canada, there is certainly a challenge when it comes to one have maintaining data quality, because if they have fewer resources to be able to conduct surveys and help improve their sample selection, then that adds another further issue with the quality of data that we're seeing at the moment.
One of the things that they were kind of consistent about pointing out was how the immigration levels, like the size of the Canadian population, had kind of uh, not skewed. That's maybe not, but changed the Canadian economy overall. Like, does that play into this, or are they still kind of smoothing things out from the rapid pace of change that we've seen over the past few years?
It certainly has an impact and an influence on the economic picture as we see today. Now, there's a couple of ways that we can put this into context. Say, for example, Canada's per capita real GDP per capita has been dismal over the past couple years, or at least a couple years. And part of the reason why that's the case is the sudden change in in the population and in the immigration landscape has also played into the performance of Canada's per capita real GDP. It's a possibility, and it's certainly a case that StatCan may have to adjust their sample sizes. Now, drastically changing the methodologies isn't necessarily the step in the right direction to account for those changes. But one thing to keep in mind is that we are also seeing a drawback in population numbers, especially as population responds to the new federal immigration targets. So that's another thing to keep in mind as well, because a lot of these one-time shocks are often temporary.
So what overall are you and Randall in this report? What are you saying would, from how do you fix the situation? Like what are your best pieces of advice for StatsCan to really kind of smooth out this data so we can get back to, where we're going, right in line with estimates, nothing. or not, raising a Spockian eyebrow every time these reports come out.
We've outlined this in our conclusion, but I think an easy way to address some of these issues is that allocating more resources to collect and compile the information is certainly one way to help address. I mean, that's probably arguably one of the easiest and most practical ways to address sort of the issues of data quality that we're seeing today. I mean, part of the reason what's playing into data quality is that, one, there's like falling response rates, but two, StatCan in general has struggled with resources now, especially with the constraints that's being placed on them as a result of the comprehensive expenditure review and also through changes in budget 2025. So that's certainly a way, definitely a practical way to address the issue of data quality as we see it today.
Well, it'll be interesting to see if in fact, maybe this was all an anomaly. I don't know. Well, like I say, the second quarter looked like it was kind of back to normalcy, if you will, from a forecast and an end result standpoint. So we'll see how it goes. And but yeah, thanks for doing this morning, LJ. It was great talking to you and a really interesting topic.
Thank you so much for having me again, Mike. It's been a pleasure.
And that was LJ Valencia, economist with Desjardins. You've been listening to In This Economy. My name is Mike Eppel. Thanks for listening. If you want to reach out, I'm always here on email at mike.eppel@rci.rogers.com. And on social, I go by @Eppman, EPPMAN. Thanks for listening. We'll talk again soon.